In this video, watch an S&B trader teach you how to read the tape in a weak market environment. When we asked the trading community what types of videos they would like more of from us, the answer is universally the same. More tape reading videos, please. And so we produced another video on tape reading for you. Hi, I'm Mike Bellafiore, co-founder of S&B Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the playbook. Let's get to work on sharing this important trading lesson so you can grow your trading account.
We're going to do a video on reading the tape, and I think what we wanted to kind of highlight with the tape isn't necessarily one specific thing, but rather a different market environment in which you are trading the tape. There's a lot of different ways to trade the tape, and I think a lot of different styles can come into play, but what I think can affect traders across all aspects would be whether you're trading in a strong market versus a weak market, you're going to get a lot of the similar action on the tape that you need to be aware of in terms of controlling risk and how you go about your trades and structuring your trades and how you're executing them. So in a strong environment, what we mean by that is not necessarily that like stocks are going up, but rather there's like a clear market force that is pushing a general direction for stocks. So like in my terms, in my opinion, a strong environment for trading would be if we have a clear catalyst that's pushing stocks down versus pushing stocks up. There's clear levels to play off of, clear setups to play off of, a clear catalyst to play off of, and there's you can trade off of that information. What that's going to do is it's going to give the players in the market a clear idea of how they want to risk. They're going to put on a lot of risk in a certain direction when they feel confident about it in a term, and when they have a number of checks that line up in their favor. A lot of times with strong environments we'll have a theme that's running the market. I would say in this last year we had the EV theme, we had the weed stocks at the beginning of the year, we had the meme theme. A lot of different themes, and you'll notice it across the market. You'll see one name go, and then there'll be a bunch of names behind it. So like for memes, it was GME first, then AMC, and then there was all those other names, and that would be a strong environment to make trades in. Yeah, so sentiment in a strong environment is going to be very clear. One way or the other, you'll generally have the pullbacks will be shallow in one frame, and you won't have people, all back and forth, like super bullish at the highs and then super bearish at the highs. You won't have that. It'll be, this clear picture of sentiment. Clear levels and setups to play off of. Like in a strong market, you'll have those rising wedges, and then there'll be breakouts, and then they'll test the breakout and then go, and there'll be a bunch of volume on that. You won't have this choppy setup where we break highs, then we break back down, and then come back up and then break, or come back down, break lows, and then come back, and then you end up being in range. So that's not what you want to see in a strong environment. So not necessarily that it would need to be up or down, just clear picture. Weak environment, you're going to have factors, like you'll see it in the news, there'll be a lot of uncertainty, broader indices won't be able to make up their mind. You'll have a lot of, days where you start the market down and then it somehow closes up, and then there just will be not a whole lot of clear direction. You won't really know. There will be a huge range on a daily chart that's wicked highs and wicked lows. I think we have IWM right now that has done that. But yeah, there's going to be a lot of volatility. There's going to be huge moves that don't necessarily make sense. A lot of traps that get put into play. And what that's going to do is going to keep the big players from wanting to put the risk on. And so you're going to see that on the tape. If we don't have big players putting risk on at levels, we're going to get this big breakout that doesn't have any follow through. It's going to lose volume above a level that it should be getting follow through, and it's going to create for a less liquid market that's going to move prices around. That isn't going to make it as clear for you to put on high risk to reward trades and probability trades. And then lastly, like, the opposite of the strong environment, you're gonna get choppy setups. So mid-range things where, a lot of times in a strong environment, there'll be trades that just pop out at you like, oh, this stock looks strong, it's a good setup, it's breaking out. And in a weak environment, you're gonna get a lot of setups that don't make sense to you, and you're gonna be, trying to force ideas, force trades, and it's gonna feel like, you have a headache at the end of the day. So yeah, that's the two different environments.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
Yeah, so we'll break into, a couple of the stocks I've been trading, and right now we're in a weak environment. So this first part of this video is just going to be, what I'm seeing on the tape and what is helping me decipher that we're in a weak market environment, that things aren't going to be necessarily the cleanest, and how I'm going to manage risk in that sense. So the first one is DWAC. I think this was on the 11th of January. So DWAC, it had its crazy move, and now we are kind of, I think they had a catalyst for their social media company is going to go live in February. So, we've had like this kind of run up right here, and I think we're starting to break out. And I think this trade came on this day, so it's like trying to break out from this, big top we put in from when it first went public via SPAC. So this will be, kind of the beginning of the moves. That's what we'll be focusing on, is what does the beginning of the move look like in a weaker market environment. Your initial volume, and as you can see, like down here at the lows, like we have a 70K volume bar coming in. And on this day, 100K was the highest that we had so far. And I think I also had mapped out from the days prior that a 200K volume bar on the 1 minute was classified as legitimate volume. So that means somebody's getting into this thing that is crucial. And this is when I want to be making trading decisions, when that real volume is coming in. And what we can see, right away, is that volume is starting to come in, but they're still hitting that bid. And you'll see that by, these red prints that are coming in. Like if something's going to be a clean breakout, I don't want to see them necessarily hitting the bid right away. I want to see the tape start to speed up. I want to see the bid and the ask come together. I want to see that start to tighten up. Because when a lot more volume comes in, you get a lot more liquidity, and you get a lot more players, and what that does is it ends up tightening the spread up. And so we'll wait here. I think where this trade really starts to get a lot more interesting is when it gets above 60. So in a weaker market environment, we also have slower starts to breakout. So if this was a strong market environment, and that volume had started to come in like that, you'd start to see the offers really get raised, the price would start skipping, you would start getting an expansion of range, and we're not really seeing that right here. But just to be clear, like I want to make sure this gets above 60. I think that's like the true breakout level, and we still haven't really gotten that 200K volume bar that is classified as like real volume coming in. I skipped a little ahead here, and we're getting like some consistent higher volume bars. So as far as the intraday is concerned, this is considerable volume. It's worth a try at this point. But I also don't want to get long it right before 60 break, and it just ends up being a wick. So what I want to watch for in a strong environment is it's going to break this 60. It's going to move away from the price quickly, and then it may have like one small dip right back into it that barely spends any time there. So see, like just the prints are coming in Still pretty slow. You're not really getting great action here. This isn't making me feel great about the trade. And so then the 60 comes in, they start to decrement. You see all the offers come up. And this is where I would get really close to watching like this. Like if I think this is going to be a true breakout within a weaker environment, it's going to do something that's going to pop out at me. So we break through 60, and you can see right here they're slapping the bids. All those red prints come in, you see it come back under. They didn't really move away from that price. We did get some volume in right here, like that's considerable. But it's to be expected on a $60 break. Like there's always going to be a lot of liquidity up at a round number, with it being a psychological level. And so I'll take that into account. Like if something's going to be a true level for me, I'm going to see something really pop out on me when it breaks that 60, and that's going to get me excited. But if something kind of just breaks through the level and then comes back under it, that feels like a leaked level to me. And it's not necessarily that this trade won't work. And this is a much better move right here as the offers start to come up. See how the tape starts to speed up. That's going to start making me feel a little bit better about this. Now I think I would probably want to start putting some bids in to try and capture what might be, the beginning of this move. But I'll also keep in mind that this is a weaker move, and I'll probably be, much more agile in taking off shares. Unless that tape really starts to speed up. If the rate tape really starts to speed up and it starts holding firm while doing that, I'll be much more lenient to not take off as much size. So it's just a matter of how I'm going to trade this. The trade can still work in a weaker market environment. It's just got to be managed a little bit differently. So we can see still kind of some red prints coming in. I think I just did get long here. And I kind of want to see this work right away. I don't want to see this mess around with 60 too much. If we check back in on the volume down here, it's starting to 150K bars consistently. That's making me feel a little bit better about the trade. At this point in time, I feel like this is worth some salt, to see if it can expand range. But if it's going to mess around with me too much, I'll probably be offering out on the tick ups that I get. I'll probably be not bidding back in on the small dips. It's just a matter of how I'm managing it. So I think the biggest things to take away, and I'll start to click through, so start to see a lot of similar action, is that the range isn't expanding. Like I think this move right here, we'll click back a little bit. This move right here started to pick up a little bit, and this is allowing me to, scalp out, some of the shares that I had to kind of create a core. But it's not something that at this point I'm going to be adding back into on dips, because I just don't feel like it's really giving the type of move that I think is going to, send this to 70. I think maybe it can come up another $1, or maybe another $2, $3, and I think the ATR on DWAC is 5.4, and I want to be taking that into account in a weak market environment. We are up 10%. Anything to capture P&L in a weaker market environment is huge. I think the difference between my trading in a weaker environment versus a strong market environment is going to be how much P&L I can capture at different points of the move. In a weaker market environment, I'm going to be taking P&L earlier in the move, so that I can pay for the trade maybe on a higher time frame, restart the trade on a higher time frame, versus a strong market. When it's the beginning of that move, I'm not going to be taking off as much shares because it's showing that there's true buyers in there. There's real money behind this trying to push it to levels that I think it can go a lot higher. So it's a matter of figuring out how much energy a stock has within a market environment. And you can make money in both. Strong market environments, you're definitely going to make more though. So yeah, I think we kind of hit this one in the head. There was no range expansion. The move was slow. The break above 60 wasn't great. And so I'm going to manage that. I think if we click ahead here, I think it does skip up a couple more points, but it's ultimately quite a weak move above a level that I'm not necessarily too excited about, and I'm going to be more, I'm going to take profits, quicker. So let's get to the next one. So NKLA, a little bit different of a situation. I think this one was traded on the 13th. So this day right here, I think right at the beginning of this move, like NKLA is this is going to be, for the way I'm looking at this trade, is this should be a short squeeze trade. Like NKLA, they had all that in the news about their founder, about the company being a fraud. And it came all the way back down. They've had terrible sentiment on this stock, terrible news. It is a stock that could possibly go to zero. But a lot of times what happens with those stocks is they get very short heavy. So if they're going to break out in a strong market environment, they will run stocks, based a lot of times, even if they have a bad story, because they know a lot of shorts are in the stock. And so if I'm looking at this NKLA on this day, I'm thinking the main idea behind the trade isn't this is a great company, it should go up. It's, man, there might be a lot of shorts that get nervous at this $12 area, at this $11.50 area where they start to cover. And so I'm going to look for signs of that on the tape. So we'll jump into here on the tape. Again, this is a weaker market environment, and I'm going to keep that in mind on the trade. So NKLA right away, I don't even think I had it pulled up when this volume bar came in, but NKLA on the day is doing 4R vol. Their average volume bars when they came out on open was 650,000. And so I'm thinking in my head, okay, if this thing starts to die down, starts to go into range, and then all of a sudden it does something like a 700,000 bar, that's going to be interesting to me. A perk that gets above levels with volume like that, that's going to be interesting to me. And I think what happened was someone told me about it on the desk that it started to perk because they knew I liked the idea. And I look over at this thing and it's doing a 1.5 million bar. And that is double the opening volume, and that's going to get me super interested because that's, that could be a big player. That could be the start of a bigger move that I'm going to get very interested in. But again, weaker market environment. Let's see what happens. So here it is. Volume comes in right away, and a volume bar like that, like I'm going to try and buy any small dip, any short dip. In a strong market environment, when you get volume like that initial volume bar, we probably shouldn't retrace more than like 20% of that bar, which is kind of where this 1135 mark is. I think we got a small dip in that area. I think I bought a little bit. And I want to try and scalp out the beginning of that move. But right away, you can tell right here, and I could feel right away that this didn't really feel right, was that when they did give that first dip and then it pops back up, you can see on the tape that they immediately, the second it goes into that 40 cents, they start hitting it down. And then what you'll start to notice on this tape is that every time it gets like a 1 or 2 cent tick up, they're going to slap it right back down. So right here, a little bit of a tick up right here, but then no follow through, and then they start hitting the bids right back down. That's not a good sign. That probably means that could have been a spray, that could have been some sort of algo that printed stops at that area. Maybe they knew there was some volume. I don't know. We never really know, but what we do know is what we're seeing real time, and that's that they won't get off the offer now after a massive volume bar just came in. If that was real volume, if that was someone really trying to buy that and starts, maybe it's an algo that's trying to squeeze shorts, they're going to work fast, and it's not going to take too much time. And what we're seeing is that every tick right here is being met by them hitting the bids and then moving the offer down. And what we'll see is this will probably completely retrace this bar. I'm going to try and give it time, but this is ultimately going to become a failed trade, and I'm not going to hold on to it because I know that this is a weaker market environment. And what we see a lot of times in weaker market environment is it's flipped. In a weak market environment, when we get a strong volume bar like that, there's follow through. In a weaker market environment, they'll use that stronger volume bar to reload shorts. And you'll see fast moves down after what looks like the scariest moment for a short ends up being what is probably the strongest, or the strongest entry point. And this one's a quick one. There's not much else to see. We're already seeing it. This tape is starting to slow back down. That's not what you want to see after a volume bar like that. You want to see the volume getting bigger. See how this volume's starting to peter off and starting to get back to what the levels were before that volume bar came in. That's not what you want to see. Like what we saw on that last tape on DWAC was the volume bars were sustaining. You don't want to see that. That's why the DWAC continued to work a little bit, even though it was still a weaker move. But in this trade, like, we're probably going to fade off if those volume bars come back in. It comes back into range. Nothing happened. It's a trap is what's happening. And so this, I'm not going to be as stubborn with this. I'm going to want to let go of it. I know it's a weaker market environment. I don't want to get too crazy. Yeah, that's basically it. If we skip ahead, you'll see that they continue to just, every time there's one little tick up, they just work it right back down, and they slowly work on retracing that whole volume bar until I believe it just ends up failing. Yeah, ends up failing. So then the third one is will be a short. Shorts are going to work a little bit better in a weaker market environment that has uncertainty because people are much easier to, slap a bid. I think Ford was in play, due to the EV stuff. That was one of the hotter sectors in the market. And I think this one was traded on the 10th. So that was going to be sometime before this breakout. So this one was one of the cleaner setups in the market environment while the market was weak. It had a lot more uncertainty. And I think I was just playing off of an intraday level on the 10th. This isn't a really, a crazy day for this. But it stood out in the sense of, how it traded on the tape. $24 level was like a decent support. And so I kind of wanted to play the breakdown or see how the look was. In a weaker market environment, I felt like I think the SPY was weak on this day. I think if it broke down from that level, it could, I don't necessarily expect things to be clean trending in a market environment like this. And if I did, I don't think I would have taken this breakdown at 24. I would have waited for it to break out at 25. But trying to just take advantage of people expecting something, and it starts getting near those lows and it's breaking down, taking advantage of people slapping out. So right here we break down from 24, and right away on the tape, what I'm going to want to see is a pop back into these levels that's met with quick selling. Yeah, so it moves away from the price. That's good. I think I'm waiting for a pop here to get involved. And this volume bar right here is good. This is going to bring me to the stock. I want to play high volume areas. So that's the highest volume bar of the day. That's definitely going to stand out to me. That's a check mark. We'll watch this tape now. What I'm going to want to see from this is if it does have little pops, which I think it might do here in a second. I want to see it come back into that area, and then they're quickly flooding the offers, which they are right here. See how many offers start going up right here? That's something good to see. I don't want to see them eat those offers, though. If they're putting up offers and then you're seeing a bunch of green prints come across and they're eating it and then holding it, that would be bad for this breakdown trade. I think another thing that stood out to me on the breakdown was when it did break down, the tape did really accelerate a bit, and shows that there's someone, uncharacteristic that is in the trade now. Something we talk about character changes a lot on the tape that we can trade off of, and that would be classified as a character change. So right here, we pop back into this level. And watch how this 98 cents, they can't really, get too many fills right there. If there was a buyer or if there was an algo or something that was just trying to play this trap, they would hit that 98 cents and then spray it back above 24. And we didn't get that. So that's a good sign. I think I shorted a little bit on that. And now what I'm going to want to see is like quick move to the lows. Like it tries to make that move up, and then there's a quick, down move to the lows that I can, scalp out some of the risk, which it's doing right now. So that's confirming. Not yet. So here's this move lower. Seeing a lot more red prints. No flashes of green. Like those usually scare me, where all of a sudden the price moves away from where I'm trading it to the upside. Like I don't want to see that. So that's confirming move right through there. This tape accelerated a little bit through the lows, and then after it breaks that lows, it's not, quickly moving back above like 23.95 or something like that. That would make me feel like it's trapping a little bit, that there's a bid every new low. That would make me feel like the trade's going to be choppy. It's not going to be great. So I think this one was a little bit better one in a weaker market environment in terms of direction. And I think that's because it was to the downside. I think in a weaker market environment, you will see a little bit cleaner action to the downside. Just because when people are uncertain, they sell first and then think later. And so you can kind of think of that on the tape. So situations where you're going to see that is like anytime you get a pop, it's quickly met with selling. I think there's a few times Ford does that, if we can skip to. So I think this pop right here quickly gets met. I like to use these EMAs, the 9 EMA. In a stronger trend to the downside, they usually don't break this 9 EMA on the pops. In a weaker trend, they'll take it to the 21 EMA. And I think we're coming into it right now. What I want to see is like this pop right here quickly gets faded, and they flood. They put up offers right into the 9 EMA, and then they flood the bid. The offers can't get hit, and then they quickly flood the bid and it pushes it back down. Like, see this little wick at the top of the candle? That's a good sign, that they're still meeting, still pushing that bid down, and not, taking offers and eating offers up. So it's just like little moves on the tape like that give me kind of a sign that there's somebody, when the tape speeds up at certain moments and then kind of slows back down again. Those are little pieces of information that I can use to kind of classify, okay, how's this trend moving? Is it clean? Is it forceful? Again, this isn't the craziest, best trend. It's a weaker market environment. This thing's also not breaking a huge, great level. It's not going to speed up a lot. That's information I'm taking in my head, so I'm going to be quicker to cover the trade because I think, it's very possible that it can reverse. And I want to be capturing P&L. I don't want to have, a trade that's starting to work. I noticed something on the chart and on the tape. I'm taking advantage of it. I want to put P&L in my pocket for, a stronger market environment, which we might get, once like the market uncertainty, washes up, and then all of a sudden a theme sets in. We'll go over in the next video how I would trade that differently. So now we're really breaking down. That last pop really got met with sellers, and so now I'm feeling pretty good about the move. But again, no range expansion. That's another thing that we don't get in a weaker market environment. I would want to see this thing's trading, 10 cents at a time. It's within little minute bars, it's making, the range of those minute bars is like 10 cents. If this were a range expansion move, if this were volume, if this were a move where we had clean, strong action, that breakdown from 24, all of a sudden it would break down 25 cents and then start, really speeding up, and the range on those 1 minute bars would be like 30 cents. And if it really wanted to break down, it would, get bigger. but we're not really seeing that. And so I'm going to take that into mind, that this can only last for so long, that it's continuing to do the same volume and same price action, and I want to be able to take profits on those moves. So I'm keeping a little bit of core. I have most of my size off, and I think at this point, I think it's still trading under 24, so if it pops back into, if it gives any, bigger pops, I think I might add some size back on, but I'm not going to get too crazy. I won't get back up into my normal size. I think I do put a little bit back on. I think this bar was fake. I remember that being traded. I think that was just an issue with my TC2000, so that bar isn't real. But ultimately, it's going to be pushing up here. And so I think this is kind of getting later in the move that I was looking for. So I probably want to see, again, that this, they are, that they come up here and kind of soak this, but they don't really move the price away from it. So that means, like, yes, you can see a lot of green prints flashing, but you're not seeing the price move. And that's what we would like classify as like kind of a soak, where a lot of prints are going off at one price, and then you're not really seeing like the price actually move. So there's a lot of volume being done right there, but that just means someone's like reloading the offer. And then if all of a sudden, a couple prints bring it down, like, that means that there's just much stronger seller in this than there is a buyer, and I'm going to use that as information. And so we're starting to see that now, starting to move back down. They're not doing as much volume, and it's pushing it down 5 cents. They just did a bunch of volume at the 90 cents and they couldn't move it, and now they push it down 5 cents and see all these bids are just easily getting slapped. There's not really much of a fight on the bid side. That's helpful for a weaker trade to the downside. Yeah, so I think what I wanted to discuss more in this trade was exactly that, how when it pops, it soaks a lot at the higher prices but doesn't actually move the offer up, and then when they turn around and hit the bids and the sell cycle comes in, it moves down much harder. Like that's confirming for a down move. And when that, if that character changes at some point in this, I'd probably size down my core a lot, and I'll call it a good little scalp. This is definitely a scalp trade that I'm doing on the tape. That's when we want to use the tape most often, is those big turns, those big breakdowns, how those breakdowns trading, how far do I think this trade can go, how much energy is in it. And in a weaker market environment, these are all the things that I'm taking into account. Okay, do I want to go for a home run on this trade, or do I want to just take a single, take some P&L, and move on to the next trade, look for the next character change? Skip ahead on this. I think it does end up making a couple more lows, doing the same process. Nothing really changes on the tape. I think right there you saw that bar flash up. I can almost guarantee you that probably flashed on the tape, looked a little scary, and then they started hitting the bid and it walked it right back down. Nothing has changed there. I still want to keep some short. I'll take some off as we're getting lower, but I want to stay short until I see some sort of change, and I think that does come when this tape starts to speed up a little bit here at lows. But mostly that's what we wanted to cover here with a weaker market environment. With the weaker market environment, it's not a matter of the trades won't work. They're just going to work a different way. They need to be managed a different way. You need to go for a lot more singles on trading idea, at least in my opinion. And yeah, that's our video on tape reading in a weaker market environment, and then we can do the next video on strong market environments and see how much different that tape looks when these are put back side by side. But that strong market environment has to come around.
Hey, go ahead and click our subscribe button so you don't miss any of the videos they were producing for you in the trading community. And please take the time to add your feedback in the comment section for what videos you'd like for us to produce next, and what you found helpful from this video. From all of us at S&B, train and trade well.